SABMiller, this is the next in scale in terms of our descending market organization here. So the world's second largest beer brewer, currently in merger talks with Anheuser Busch-Inbev. Share price has gone bazonkers. So the market cap is 1.27 billion rand, okay? So that's, no, not billion, trillion rand.
Yeah.
1.27 trillion rand. Remember, it was at R1 trillion, and now it's more, right, because of the bid buyout premium. So that's $92 billion, to put it in perspective. Price to earnings ratio has gone up to 27.74. Dividend yield has compressed to 1.98. So what do you do now if you own them?
So, yeah, I mean, we had a look at the portfolios, and every here and there we had all of a sudden we had a substantial overexposure. So we sold a little bit of it, but now it's kind of trading at what the offer price is talked about. So we don't think the price will move much from here. It's probably where the offer's going to come through, and despite how the offer's going to come through, you know, we took some cash and we've seen other opportunities.
And so I think that has been quite a common approach. So there you go, it fires higher.
Yeah.
Okay, but now if the deal comes, and the sense is that it is going to come because all the lawyers over there, and there's a time frame within the London law, so there will be probably a option to have either Anheuser Busch-Inbev, SABMiller, megabrew.com, the whole thing, or some cash.
Yeah.
Or no, cash or shares. It seems there'll be a potentially even maybe only cash.
I think it would be quite difficult, like we discussed earlier, for them to remove any shareholding for South African people from the bourse here. So the demand from here is definitely that people would love to still be able to hold shares in whatever the merged entity would be, but the practicality of that and our pulling power as an investor, well, as a combination of investors from South Africa, doesn't look too strong at this stage.
Yes. So even like big investors like the PIC only have 3.5%. South African institutions are not huge in the bigger mix of SABMiller, even as it is, and in the combined entity it'll be pretty small.
That's
but
true.
hopefully holding thumbs, that will still be possible. Then you'll get your shares swapped, but the alternative will be to take cash.
That's true. So if you're going to take cash, then you might as well sell them now, because you're probably going to get the same. And you might as well buy something else.
Plus, there's also the sense that perhaps maybe there could be a slip twixt cup and lip, in which case then the share price would go down.
That's always a possibility.
So how do you feel about it now? I mean, it sounds as though we're still hot on it.
We're still hot on the company. We like the exposure. We've liked SAB. I mean, just a while ago, before the merger news broke, we were still buying it. And we were still saying, buy it if you don't have it. So, but now the PE has gone up. The price has gone up 25%, which is quite a bit. You don't want to be the buyer of this now. You're not going to get a lot of benefit from buying the company now, trading at the price that it's probably going to be taken over.
But if you do elect to keep the shares and then it becomes part of a much larger global group, maybe it'll be hot
then
for the long run.
you don't have to sell them, but you know, you just know what your
So it sounds like a hot, but with a little asterisk, little qualification. That's good enough. I'll allow that. Bronwyn would be apoplectic, but